persistence and contain second round effects. I would read this sentence again. The MPC was of the view that further calibrated monetary policy is warranted to keep, number one, inflation expectations anchored, number two, break core inflation persistence, and number three, contain second round effects. These actions will strengthen the medium-term growth prospects of the Indian economy. Accordingly, the MPC decided to increase the policy repo rate, as I have said, by 35 basis points to 6.25% and to remain focused on withdrawal of accommodation while supporting growth. As regards the stance of the monetary policy, the MPC took a holistic view of the policy rate and the liquidity conditions relative to inflation. Adjusted for inflation, the policy rate still remains accommodative. Over the next 12 months, inflation is expected to remain higher than 4% target. System liquidity remains in surplus with an average daily absorption under the liquidity adjustment facility, that is LAF, of 1.6 lakh crore in November this year. The overall monetary and liquidity conditions remain accommodative, and hence the MPC decided to remain focused on withdrawal of accommodation. I would now like to provide our assessment of growth and inflation. First, I will take up growth. According to the latest data released by the National Statistical Office, that is NSO, the real gross domestic product posted a growth of 6.3% year-on-year in the second quarter of this year, driven primarily by private consumption and investment. This also is in line with our expectations. Going into the third quarter of this year, economic activity continued to strengthen in the month of October. Urban consumption firmed up further, driven by sustained recovery in discretionary spending, especially on services such as travel, tourism, and hospitality. Passenger vehicle sales and domestic air passenger traffic posted robust year-on-year growth. Rural demand is recovering, as reflected in the pace of tractor and retail two-wheeler sales, with rising farm activity. Investment activity is also gaining traction. Non-food bank credit, and this is something very important, non-food bank credit rose by rupees 10.6 lakh crore during April to November, as compared with an increase of 1.9 lakh crore last year. The total flow of resources to the commercial sector, expanded by rupees 14.7 lakh crore during this year up to November, as